When it comes to actually being able to live off of passive income, there is no greater choice than being able to live off dividends, in my opinion. While there are other ways to generate passive income, such as buying real estate, writing a book, or beginning a blog, there is nothing quite like being able to live off dividend payouts from your investment portfolio. With the exception of perhaps monitoring your portfolio once every couple of months, it is the simplest method to earn living without having to lift a finger. Aside from that, I believe it is the only true technique to getting passive income. The amount of money you'll need to invest to be able to live off of profits is the biggest stumbling obstacle. Just a quick search on YouTube for this issue will turn up a slew of videos claiming that you need at least $1 million in the bank to retire easily. Furthermore, the recommendations on numerous financial and business websites are considerably worse. According to a Business Insider story, if you want to retire at the age of 35 and earn $65,000 a year, you will need a minimum of $3.3 million in your stock portfolio. Or, if you don't think you'll make it that far, you'll just need $2.8 million by the age of 45. They estimate that even if you retire at 65, you will still need $1.6 million saved up for a monthly income of $65,000 to live off of stocks until you're 90. Most people become discouraged after reading this article, watching all of these YouTube videos, because it appears that only the super wealthy can truly retire early in life. But today, I would like to point out to everyone that there is a way that significantly more people can achieve the goal of living off dividends without having to invest $1 million or wait decades until they're 65. We will look at a few different sorts of investments to see how much money we'll need to live off of dividends. But first, please accept my warmest greetings if this is your first visit to our Smart Stocks Academy channel. Be the first to know when a new video like this is released, hit the like button, subscribe, and click the notification bell next to it. Now let's get to the video as soon as possible. For the purpose of this example, we'll suppose that you wish to live on $4,000 each month, which may or may not be a lot depending on your circumstances. Let's start with some of the most popular dividend growth investments, which is what these videos and articles are all about. First is Johnson & Johnson. We'll utilize Johnson & Johnson, which is perhaps one of the most popular dividend stocks out there. Johnson & Johnson is currently trading at $177 per share. It now pays a quarterly dividend of $1.06 per share and yields 2.39%. If we want $4,000 per month or $12,000 per quarter, we will need to split $12,000 by $1.06, which becomes $11,320. This is the amount of J&J shares we need to own in order to make $4,000 each month. If you stick to the dividend growth strategy of consistently investing, you will eventually be able to live off of your J&J investment. And the truth is that you won't have to invest $1 million. All you have to do is keep investing a good amount every month. Wait 20 or 30 years for it to appreciate, and you will have a nice nest egg to live off of. While this is perfectly acceptable, there are a few drawbacks to this method of investing. First and foremost, and most likely the difficult part, is waiting. Because Johnson & Johnson barely yields 2.39%, you will have to wait a very long time to have enough shares to live off of dividends. If you assume, a stock can boost its dividend every year for decades. During that period, I've seen a lot of folks giving up because they've lost interest in the process since it is too long. To achieve this, it normally takes the majority of your professional life. Don't get me wrong, this isn't a bad way to invest. But if you stay the course and start young enough, you will eventually amass a sizable sum of money. But in terms of retiring early and living off dividends, this isn't such a good approach due to the sheer amount of time and commitment required. So, if saving up money in Johnson & Johnson type stocks is going to take a long time, the next natural step would be to consider investing in higher yielding types of investments. Second is Realty Income. Let's take a look at Realty Income, which is another extremely popular company. This firm is a real estate investment trust, which means it owns income-producing real estate, and is mandated by law to distribute 90% of its earnings to shareholders in the form of dividends. It presently pays a 4.22% dividend, which is more than most consumer staple companies such as Coca-Cola and Procter & Gamble. It also pays a monthly dividend rather than a quarterly payout, which is also a plus. Realty Income currently pays $0.2470 per share per month, which will aid us in our calculations. Realty Income has increased its dividend for 98 consecutive quarters, earning it a reputation as one of the safest REITs on the market. We'll take $4,000 and split it by 0.2470, which is currently the monthly dividend to receive $4,000 every month. When we do so, we can see that in order to make $4,000 per month through Realty Income, we need to acquire 16,194 shares. We get $1,138,000 and $114,000 by multiplying 16,194 shares by $70.28. Obviously, this is still a substantial amount of money. It is not as awful as Johnson & Johnson's $2 billion, but it is still out of reach for most people, at least in the short term. Even with monthly dividends that allow for faster compounding, most people will take a long time to accumulate enough Realty Income shares to live off of. Next, let's take a look at a different stock now, and we'll up the ante by looking for a company with a very high dividend yield. Third is the Altria Group. The Altria Group is an American corporation that produces and distributes cigarettes, tobacco, vape goods, and alcoholic beverages. It now has a huge dividend yield of 6.92%. It pays quarterly, and at the time of this video, it was paying 90 cents per share. To make $4,000 per month or $12,000 per quarter, you will need to own approximately 13,333 shares of Altria, and at its current price of $52, you will need to spend a total of $693,316,000 to do so. This amount is now significantly more accessible to a larger number of people. Many people could accomplish $4,000 per month in passive income at some time in their lives, if they stay committed and continue investing in this stock and commit to reinvesting those profits if they start early enough. But we must ask ourselves a simple question. Is it really a good idea to put so much money into one stock and rely on it for our livelihood? Obviously, the answer is no. I would never advise spending $500,000 on a single firm and relying solely on that company for your livelihood. To guarantee that one of the assets does not decrease the payout too substantially, income investors should diversify their investment portfolios. If Altria cuts their dividend at any point in the future, it will have significant influence on your dividend income and, as a result, your livelihood. Thus, it makes sense to buy now in a variety of firms. But the problem is that there aren't many company stocks with dividend yields comparable to Altria's. High yields are offered by some business development corporations and master limited partnerships, but these investments are inherently risky. As a result, the question arises, what can people invest in that pays out extremely high and often still expanding dividends? Covered call ETFs, which give outstanding dividend yields, growing payments, and monthly dividends are what I believe makes for a smart investment for folks wishing to live off of dividends sooner. These are a very new type of investment that hasn't been around for very long, but they are gaining a lot of traction. QYLD is the most popular covered called ETF on the market, with current dividend yield of 11.98%. There are two other covered call ETFs that are quite popular. For example, JEPI uses covered calls and keeps equity-linked notes for stability. Then there's NUSI, which employs covered calls and protected puts to keep the fund from plummeting in value during a bear market. As you can see, JEPI and NUSI have smaller dividend yields than QYLD, but they have far greater long-term price appreciation. So let's calculate how much money we'll need to invest to earn $4,000 every year. Let's start with NUSI. If we split $4,000 by the fund's last year monthly dividend, which was about $0.159 on February 24, 2022, we obtained 25,157 shares. We can acquire $625,906 by multiplying that by $24.88, This is better than Altria. But keep in mind that this isn't a diversified ETF and it is not invested in a single company. Finally, we'll employ QYL. We obtain 19,801 shares if we split $4,000 by the previous dividend, which was $0.2020. If we compound this by the current price share of $21, we can see that in order to live off of $4,000 in dividends per month, we'll need $415,821 in total. However, keep in mind that you are not required to invest the entire sum. If you reinvest your returns every month and wait for the snowball effect, you will need to invest a lot less than this, depending on how long you wait. If you ask me, investing in covered call ETFs and other stocks and living off of the profits is far more doable than producing a best-selling book or making a fortune selling stock photographs or jewelry on Etsy. Even if you think you won't be able to live entirely off of dividends, being able to earn an extra $1,000 or $2,000 a month can cover a lot of expenses in your life. You can live off of dividends as long as your portfolio is diversified. But whether you pursue dividend investing for growth or income, the most important thing is to get started. You'll be closer to establishing a nice nest egg if you start investing in dividend stocks or exchange-traded funds sooner rather than later. And with that, today's video comes to an end. If you haven't already, hit the like button below to show your love and support for this video. Also, subscribe to the channel by clicking the subscribe button and turning on the notification bell next to it. Be the first to know when a new video is posted. Thank you for stopping by to watch, and we hope you had a great time. We hope to see you again soon.